gonna start the recording. So that's all done. How are we doing, Lou? Nice to see you. Connecting. Matt, you good? Matt Napoli? You muted, Matt, in case you're talking. Got him. iPhone 6S, how are you? iPhone 6S? Nothing. That's okay, though. We don't mind.
It's really interesting.
We don't mind. MDU, how are we?
I'm good. How are you?
Yeah, good, thank you, brother. What's going on?
Oh, well, I'm just interested in finding out what's going on. I'm still learning.
Good, good. This is the place to come and learn. We don't do these webinars. They're not like a weekly occurrence. We'll try and get like one done a month at least. I think sometimes there's always stuff to learn. There's always things to talk about. Sometimes I think when I've been in groups before and they do kind of things every single week, they can kind of maybe blur into one. So I like to come to you guys when I've got a real good chunk of information to go through. I am currently working on the new mentorship at the moment, which is great. So that is going to be kind of dropping over the next kind of couple of weeks. I'm going to keep it private for now. I'll probably eventually release it, but I want to start giving you guys a bit of an advantage over everyone else on YouTube, if that makes sense. Now, look, I appreciate I haven't got the largest of followings yet, but I do want to make sure that my group and you guys have more information about my strategy than anybody else, if that makes sense. I did want to do a boot camp, but the logistics of that right now, I think I'm not quite ready for. Obviously, it's a very different beast when you're doing this all for free. Okay, this is, there's no funding coming this way. Look, I earn good money from trading, which is great, and other bits and bobs that I do, but I want to make sure that everything we do is really high quality, which is why sometimes there may be a delay on some of the videos, why sometimes we might be able to do webinars all the time. I want to make sure that there's always really good quality information coming to you all the time, rather than just pumping out a load of crap all consistently, if that makes sense. So I'm going to be recording the new mentorship content over the next couple of weeks, which will be releasing quite regularly over Christmas, obviously taking a bit of time off for Christmas. And yeah, you guys are going to have first access to that. Anyone who's in my Discord. If those of you are from other Discord groups, so the CTI Discord group or the LFX Discord group, that's cool. Just fire me a message on Instagram at StrongMoneyForex, and I'll get you in the main Discord group and go from there. Yoel, did you have a question? I love the little hand raise, by the way. I love that. You can just shout at me. That's cool.
No, I just want to be respectful.
Oh, I appreciate that.
I want to give a suggestion about the bootcamp.
Yeah.
I think that if the logistic is a little bit delayed or whatever issue you might find it in your end, because it's free, this situation here, I'm pretty sure a few guys on here will be willing to just make some donation to help you to do it. Well, and if you can build a link so we can just donate whatever we can.
Yeah, and I suppose that I'll be honest, that's the thing I've been struggling with most. For me to do a boot camp, it's going to be 5 days. We're talking kind of 3-4 hours of, 3-4 hours on a Zoom, and the editing side of it, so that people who can't make the boot camp, because I appreciate we're all in different time zones, the editing side of it afterwards is probably too big of a task for me. I do all my editing in-house at the moment, and look, with the greatest respects, I love you all, but I don't want to be sitting there for 4 hours editing.
I am a video editor. If you need to.
Oh, are you? Okay, good to know. We'll have a chat off it. Yeah. So I don't have the time, if I'm honest, to sit there and edit all the videos down, and I want to make sure I can produce it. So my kind of thought process is this: I'm going to get the mentorship done how I'm used to doing it, which will be kind of 20-30 minute videos. That will allow me then to kind of organize all the information. It's really difficult when you've been trading like I have for kind of 7 coming up to 8 years, and you've got all these different strategies where you've pieced all this information from, trying then to put that in a step-by-step process is quite difficult. And so at the moment I'm kind of writing down, and I'll kind of write down, right, this is the first section, that's the second section, and I'll think, oh shit, but that won't make sense. So what I'm doing at the moment is I'm kind of getting the order I'll then get a YouTube course done so that I can get it kind of playing out in my head properly. And then from there, I'm thinking I'll do a boot camp. So hopefully the new year, guys, will do it. But yeah, I think that's the other thing I was kind of toying with, is that in order for me to do it effectively and to make sure it's a really good quality product, I'd have to charge something, which then is, you know, kind of counter against what I'm trying to do here, which is make sure this stuff is free. So it might be a nominal fee, something like that, but look, I haven't got there just yet. Anyway,
I'm just going to tell you, sorry to interrupt you.
That's
I'm just going to tell you the things that I can help you with. I can help you with the editing, animation, and website.
Okay, cool.
For
That's
free.
really
So,
good to know.
worry.
Really good to know. Let's have a chat off the Zoom call, Yoel, because I might be getting you to do a bit for me. Then that'd be great.
Hey, no problem.
Jake, how are you, buddy? Is he here?
Yeah, hello. Shit,
how you doing,
bad.
buddy?
Sorry,
What's
I've
going
been
on, mate? I feel like I've not spoken to you in about a year.
Nah, I'm good, man. I'm good.
You good?
I've been working loads, mate. Working my normal job, a lot.
Getting ready for Christmas.
Thank you, man.
How's the house?
Yes, mate. Yeah, this is my first day off since the start of December at least.
Wowzers.
And
you
well,
work
I had
all
2 days
weekends
off
as well,
sick,
don't
but-
you?
What's that, mate?
You work all weekends, don't you?
Not normally. Not normally. I'm hitting golf balls. You know that. But winters sucks. So. Yes, mate. I've been speaking to my girlfriend about it. I said it's weird how during the summer I was really like lax at work and spending a lot of time doing hobbies, i.e. golf and other things. But trading wasn't going so well, and now since I've focused more and been working a lot more on my normal job, trading's miraculously got better.
That's it, mate. That's it. Sometimes you can be too kind of hyper focused on something, and then you know, I find some of my best days are when I'm not at the charts that much, where you kind of go in, you set your alerts, you take your trades, and then you kind of walk away. Those days where you can't find anything. How many times have you? I'm sure you've all been there. You're looking for trades and the setup's not quite there, and then you take something like, oh fuck, why did I do that? What was the point?
Yeah,
of that? Ridiculous.
Yeah, instant regret as soon as you lose that trade. If it wins, you think you're like, I would have taken it anyway. But as soon as it loses, you're like, why did I take that? That's fucking stupid.
Killer. Nicky, how are we, buddy? You good? You in your inside outside house again?
Yes, sir.
Yeah, it looks a bit colder there today, which I'm happier with. You got a hoodie on, so it looks a little bit colder there.
I mean, I sit in the shade, so yeah, it is cold. But...
Okay, fair. Right, I think we've got... Do you know what, Jake? Look at that, mate. I think this is our busiest webcam yet. 17 participants. Webcam? It's not that kind of show. Webinar. Our busiest webinar yet.
That's your other website, right?
Yeah, it's my other website.
Yeah, I was going to say that's a different link, right?
Yeah.
Strong Money Webcams.
Onlyfans.com/Strong Money Forex.
Right, let's get into it. So, I've got quite a lot to go through today, and I want to try and keep this under an hour. Mainly because, as much as I love you all, but I would like to have a little bit of time with my family this weekend, and I'm sure you would too. So if we can get through loads of information, it's recording as we speak, we can then get it up on the YouTube, I'll get it up today, and then we can go back through it. And obviously I'll be available as always for any questions, queries, any stuff like that. So, today we're going to be talking through AMD. Those of you who've studied ICT before will understand what AMD is, the power of 3. It's the one thing that I've taken from ICT that I use in all of my trading. That will then follow really nicely into weekly market cycles. From there, power of 3 swagger, from there, we're going to talk through the London and New York Killzones as well. It's basically an ICT course, this is basically an ICT webinar. These are the kind of the key things that I've taken from ICT. I wouldn't class myself as an ICT trader, but I have taken a lot from ICT over the years and kind of influenced it. And I think that's kind of the best way to trade ICT. I don't really like the cult environment of ICT. I feel like ICT is fantastic at what he does. He's taught me and thousands of others some really, really incredible things. And I think a lot of trading strategies out there are very heavily influenced by ICT, as I'm sure you're all very aware. However, being 100% hyper-focused on the strategy is, in my opinion, not the best way. I think to make yourself a well-rounded trader, you need to learn lots of different strategies over the years. You need to strategy hop for a little bit until you find something that's really suitable for your personality. Then when you've done that, you can then build your strategy off the back of it. I don't really think you can learn somebody's strategy in its entirety and then make it yours. I feel like no one strategy will suit you perfectly. And that's why I quite like in my Discord group, in the Strong Money Forex Discord group, is that we've got people that will take influence from me, but ultimately, I mean, Yoel, just use you as an example. You're a Wyckoff trader, but I know that you've been using a little bit of the liquidity stuff lately, and that's kind of perfect. That's what we need to do. We need to find a strategy that suits your personality, and then make it your own, and that's how you become a successful trader, in my opinion. So AMD Power 3 weekly market cycles. We're going to talk through the kill zones, so trade timing, and then my strategy. The one thing that I would say I've coined is mine is the New York trap, which I use quite a lot. So we've got a lot to go through. I try and spend 10-15 minutes on each section. At the end of each section, I will open it up to the floor so we can go through any questions and things like that. And yeah, let's get stuck into it. So I'm just going to open up a new, tab. I'll share my screen. Okay, so share. Let me share this one. Okay, cool. Right, I've got to get rid of this stupid window. We can do it somewhere. I remember we did this. Floating. It's the floating window, isn't it? I know you guys can't see this. Hide floating meeting controls. Good. Gone. Right, cool. Everyone see this? Excuse me. Everyone see the screen? Yeah? Okay. I'm going to open up a new Euro USD so I don't use any of this analysis. Let's use the Orlando one. Let's clear the charts. Remove the drawings and we'll go from there. Now I am going to use, to start off with, I'm going to use the 15-minute chart. So I'm going to go back in time, okay, and I'll show you how far back I can go. Okay, I like to do this just so you know that this isn't me cherry picking anything. So I'm going to go back to here. So it is the 17th of July 2023. Would anyone like to give me a date after that, and then we'll zoom to that date and we'll use that as our analysis point?
8th of October.
8th of October. Okay, thanks for making me work for it. Cheers, buddy. Right.
Could have said December.
Yeah, you could have done, to be fair. Right, 8th of October. Okay, so we're going to start our chart from here. I'm going to take this little section. Okay, this is going to be our little trading window. Okay, and we're going to have a look in here. So everyone is familiar with what a candle is, right? Everyone understands what a candle is. A candlestick, yeah? Okay, cool. So what do we usually have on a candle? Okay, so most candles, unless they're particularly impulsive, so this is our little trading section. This is the daily chart now. Most candles that we look at will have a wick at the top and a wick at the bottom. Okay, that is because it opens somewhere, it moves somewhere, it moves back in the opposite direction somewhere, and then it closes somewhere. But usually that open and that close area of that candle is within the range of where the candle has moved during that time frame. Okay, so for example, in this candle here, we can see it's opened here at 1.06794. At some point throughout the day, it's moved all the way up here. At some point throughout the day, it's come all the way down here, and then it's finished here. Okay, this is what makes up the body and the wick, which is why the body often has more emphasis, because usually price has spent more time in that area. The body is therefore where more orders are created ultimately, and the wick is where there are less orders, okay? And often this is manipulation. So what do we have within these candles? So we have an area that's opened, we have a movement area, usually what we call a manipulation. And then we have the larger move, which is our distribution, okay? And then we have ultimately price reversing and closing. Now, the great thing about this is that this can be used on anything. So if you look at the weekly candles, for example, you can see that the weekly candles do exactly the same thing. You have an open, high, low, close, okay? The beauty of this is that we can use this theory in everything that we do, and it translates to our next section that we're going to come to, which is our weekly cycles, okay? But what I want you to understand is that there is an area, usually in every candle of this. Oh, what is that? That is absolute nonsense. That's a dot. That's not going to work. Let's get rid of that. Okay, so what usually happens in some sort of... Let me drop down to the daily. Stupid panels come back up. Get rid of it. Right, let's go back to the daily so I can actually use my tool properly. Okay, so what usually happens is there's a low volume part of the day, or part of the candle. Let's use the candle, okay? Day's quite easy to fall into. This is a low volume part of the candle where there are less people in the marketplace, which is why we often default to the daily mindset. There are less people in the marketplace, which means price doesn't have the liquidity and the volume to be able to move in any one direction or the other, to be able to take positions, take stops, enter people into positions. The algorithm doesn't have enough fuel to the fire. Remember that in order for the price to move like this, okay, it has to have shitloads of orders. It has to have sellers being stocked out. In order to do that, it takes loads of money. So in quieter times, which is like, for example, the Asian Australian session, in quieter times, we'll usually have an accumulative part of the day, which is the A in our AMD, okay? Now, this candle here is effectively the candle that I'm drawing out, okay? What then will usually happen is, when there's a volume of orders that come into the marketplace, we'll have a manipulation, which is where it takes out, in this example, all of the buy-side liquidity. It tricks maybe early buyers into thinking that we are going really, really high. It maybe tricks early sellers into thinking we are going to sweep and then come back down. And it continually pushes, manipulates what it needs to. The algorithm does its job. And then usually what happens is it will reverse, okay? This phase here is our manipulation, and then the larger move of the day, of the candle, whatever it may be, is our distribution, okay? And then normally we'll then finish up something like this. And this in turn is what makes up our candle, okay? This is our candle body. Let's just make that so you can see it really clearly, okay? That is our candle body. This is our candle wick, and this is our bottom candle wick. So when you're looking at candle patterns and how they form, this is, excuse me, this is usually what happens in order to create that candle, okay? And if I just get rid of the candle so you can see it, so actually I'll move it across so it's still there, okay? If you go back and do your analysis and go do your back testing on these rules, okay, you'll notice that almost every candle formation has an accumulation. Make that red. I don't think these are the official ICT colors. I think he uses pink, maybe, not sure. So accumulation. Okay. We then have a manipulation. And then we have the larger move of the day, which is our distribution. Make that blue. Okay, cool. Is that making sense so far? Does anyone have any questions? All good, yeah? Pretty simple, okay? Would have thought most of you would be aware of something like this anyway. So we can use this to our advantage. Now, most smart money concepts are based off this sort of setup effectively. You're looking for a range to be formed. You're looking for a manipulation or a raid on the highs. And then, you know, the flip side of that is the bigger move that we want to get involved in. Now, this will happen almost on a daily basis in everything that you look at. So if we let's just draw on another box around this candle here. So this daily candle, okay? Let's draw on our little box here. Let's just zoom in there, pop that over here, okay? And we'll drop down to say our 5-minute chart. Let's see if we can see, and I'll take off my my ranges for now. Let's get rid of them, just so we don't get any confusion. Okay, let's see if we can see our accumulation, manipulation, distribution in this day. So, actually, I probably want these on. Which one do I want? Not that one. This one. Okay, so this is our day here. Okay, as you can see, the Asian range is normally the accumulation. So this little section here, this is our Asian range. Okay, we know where we are now, so I'll delete that. So accumulation is here. Okay, this is our low volume part of the day. This is where price is collecting orders. It probably really expands back to here. And then what does price do? Well, we have a little expansion here. And this tricks early sellers into the marketplace thinking that it's going to come all the way down, okay? This also tricks early buyers in, and this is where we get those multiple raids. So we can see here we've got a liquidity level there that's been taken. So it's taken out that low, it's taken out the Asian low at the same time. And you see how then it has a little push up and then it raids again, okay? These are these manipulations. This is the IPDA doing its job, okay? This is therefore our manipulation of the day. Sorry, I think I'm getting these colors wrong, but you know what I'm saying. Okay, right, this is our manipulation of the day. And then ultimately we have the larger move, which is our distribution. Okay, and we'll mark that on as distribution. I think these colors are completely wrong, but hey ho, we'll just go with it. I think that one was red, wasn't it? Let's just keep this unified. Okay, move on to the next day. What do we have here? Well, we have our Asian range. This again is usually, this is why I use this on a daily basis, because usually the Asian range is a really good indication of where the accumulation is going to be. So that's our accumulation. We can see then we have this manipulation down here, and often it will just be a wick like that, and that's absolutely fine. We're cool with that. And then of course we have our much larger distribution, which is our major move for the day. So we can use this in our trading consistently. And look, even though this has, you know, now completely reversed, it doesn't really matter. Accumulation, manipulation, distribution. So you'll notice when I take my trades, I'll often take trades off the back of a manipulation of Asia. Certainly through the morning, these normally occur. This is like 7:30, 8 o'clock. Again, 6 o'clock, 7:30. So these are really, really good trades to get into. And usually we'll then catch ourselves a really nice position. This one is a little bit more complicated, and look, just like anything, it's not going to work every single day. You can see that Asia was absolutely massive that day. Let's mark that one on. We didn't actually get a manipulation that day. I mean, you could maybe argue that that is the manipulation. It's like anything, guys. It's not going to work every single day. That's our manipulation maybe, and then maybe we have our distribution here. So we kind of got it on that day. It's a little bit mucky, but we got a better example here, as you can see. So accumulation, let's mark that on. Manipulation here, just green I think we're using, and then our distribution here. Okay, this is a daily cycle that you can find in your charts almost every single day. Accumulation here. Don't really have a manipulation on this one. I think the manipulation is that little section here. That's our manipulation on that day, and then obviously our larger distribution. Okay, what you'll find is that price will, before it makes its major move for the day, price will collect orders, often manipulate those orders, take out people early or enter people into the orders early, tricking people into thinking price is going to go one way, and then showing people that actually price wants to go another way. And if you look out for this cycle, literally every single day, you can't really go too far wrong, which is why just the simple AMD setup on the daily cycle after Asia has opened, London has opened, is a really, really great way to get yourself into some really successful trades. I'm not going to draw any more on. Okay, you can see how literally every day bar one, I think it's played out pretty much perfectly. Okay, so keep an eye out for that. Power of 3, I think ICT calls it. Now, where you can really get into some great trading here is where you're then coupled in with higher time frame liquidity areas. For example, I'm going to hazard a guess, because this was such a large move. I'm just going to get rid of this major box now, because I think we know our area. Okay, let's get rid of that major box. Okay, when you couple this with higher time frame liquidity zones, you can usually get yourself into some really, really tasty trades. So let's just move this up here. We don't want to lose that. Let's get that up there. Okay, so I knew without even looking back, and look, this is a completely random date that Jake had picked, okay? I knew without even looking back that this was a major liquidity area, okay? Because the larger moves are normally generated after major liquidity is taken, as you can see here. Okay, when you couple this with a major liquidity area, you can get yourself into some phenomenal trades. So what have we done here? That is a major level, so mark that on. It's now a dead level because it has been swept here by this price action. Okay, but we're expecting, because of our higher time frame bias, we're expecting that when that major level has been taken and it's kept within that major level, we're expecting price to reject. Not necessarily all the way to the top, but we're expecting some kind of rejection. Now, this is a major swing, so this is kind of like a daily, weekly swing. That's a major level, so that's absolutely cool. So we expect price to spend a little bit of time down here, but as long as on these higher time frames we haven't spent more than 3 candles below, we're generally happy to take this long. And what we can see here is that then when that following morning opens, Price has failed to make any new lows. It hasn't cleared out any liquidity on the major swing to the left, but we can see that it has swept Asia and then given us some bullish price action. You could have got in here, but it would have been quite a risky trade. You might have got caught out. For me personally, I would have waited for my MSU setup, as you can see there. Push up, push down. Sorry, push up, push down, push up. Manipulation of that level. And then I would have entered on the engulfing. Entered on the engulfing with a relatively high stop, relatively tight stop like that. First profit off at Asia, which is probably a 1R. And then we could have held up to, say, that next level here, which is a nice trade there at 6.22. So, using this Power 3 AMD setup, you can get yourself into some really nice trades. The best ones, obviously, you could trade it daily, which is why I'll often take trades daily. But ultimately, if you couple it with higher time frame liquidity areas, no, it doesn't necessarily have to be completely higher time frame, just some sort of liquidity. Let's see if any of these other areas here gave us. This is a 4-hour chart now. Let's see if any of these ones here gave us an entry at some of our key zones. We'll come back to the key zones towards the end. Okay, so let's just see if we go back to, yeah, we've got a couple there. So these areas on, when you zoom back, you know, a lot of people, a lot of traders, especially when I was learning trading, were talking about, you know, when you're, you know, looking at older zones and things like that, you know, they have less relevance, there's less orders. When they're major swing points like this, so when you've got major swings here where price has not spent much time down there, there's often always orders sat below them. So I wouldn't say ignore them completely. A lot of traders say, you know, well, that is from May and we're now in September, so ignore those lows. They're slightly irrelevant. They're not. There's still liquidity sat under them. And what you'll see is that these setups will give us some really nice trades off them. So what do we have here? Let's see, I don't actually think we got one on this one. Okay, let's have a look. Let me zoom out a little bit. Okay, so we don't get one. We don't get a setup on this one. Okay, this would have been a trade that I would have probably missed ultimately. Okay, there's no manipulation of the lows. It kind of comes down, it takes out that liquidity level, and then it kind of pushes up. So for me, that would have been a no trade. You've got one here though. So we've got our accumulation here, okay, which is, for me, like I said, it's normally my Asian range. You've then got, to be fair, you've got a couple of wiki ones here. So this might have been a losing day, to be fair. You've got your manipulation, then you've got your distribution, okay, and that one would have probably ended up being a loss because you maybe would have sold into it, I'm not sure, but ultimately price came up and moved higher. What this would have indicated to us is that in this instance, okay, although the AMD didn't give us a really clean setup, ultimately what we have is we have now a rejection from a higher time frames liquidity to the left. And what we're looking for now is we're looking probably after a couple of failed sells. So that might have been a sell. To be fair, you might have got into this one here. If you'd got a tight entry, you would have got some liquidity out there. It wouldn't have been a huge trade ultimately, but you would have got probably to your first target. So what we're looking for here is, now that these sells are failing, we're probably going to be assuming that we're going to be taking ourselves up into this zone up here. Okay. And I would then be looking for buys after a couple of failed attempts and seeing what we get out of it. But like I said, you know, once you are coupling in these higher time frame liquidity areas with these AMD setups, you can find yourself getting into a really nice daily bias, and that's typically how I'll use it. Now, what's great about this, and the reason why I like it so much, I'll just clear this off. What's great about this, and the reason why I do like it so much, is the weekly candles are exactly the same as the daily candles, which means Monday, typically, and I'm going to draw this out for you because I think it's really important to understand, okay? Let's just draw on our, actually, it's here somewhere, isn't it? Where has it gone? There, okay. Let's move this over so we can talk it through, okay. Monday is usually our accumulative day of the week, which is why typically I won't trade on a Monday. Okay, I often break that rule, as Jake will know. I'm really bad at not trading on Mondays.
Often.
But Often, yeah. I'm getting better, aren't I? I'm getting better. Come on. Okay.
1%
Monday
every day.
is typically our accumulative day of the week, which means it's normally a range-bound day. You might be lucky and get some like little trades here or there, but ultimately you're not going to get massive moves, okay? Tuesday is our major manipulation day, okay? Which means we can then, with this understanding behind you, I can't spell Wednesday. Wednesday afternoon, okay? With these understandings behind you, you can accommodate for different moves in the marketplace. For example, on most Mondays, because they're range bound, you do not want to be entering into a trade like this, where you're, say, taking that high. Oh God, what's going on here? Hang on. Yeah, you don't want to be taking a trade like that with the expectation that it's going to continue down. Let's say market is bearish, everything's looking bearish. On a Monday, you don't want to be taking a trade expecting it continue down for the rest of the week, because the likelihood is that will not happen, okay? If you were to trade Monday, you need to understand that it's going to be probably a range-bound trade, so you probably want to be coming out of that trade at the next low and accepting the fact that it's probably not going to go much further than that. Now, the thing I always used to get caught up in is that every now and again, once every 4 weeks, Monday would do that and it would continue down for the rest of the week. And then the following Monday, you try and trade like that and it doesn't work. I've learned through my testing over time is that this doesn't consistently push down in one direction all week. And go back and test it. I'll draw some on for you in a minute, but go back and test it. Whatever pair that you trade, whatever commodity index, whatever it may be that you trade, go back and test it. I'm speaking purely from a Forex point of view because that's what I trade. My understanding is that the indices and commodities trade almost identically to Forex, but I'm not an expert on them. So if you trade gold, for example, I'm pretty sure it follows this same cycle, but just make sure you test it before you go into live markets and use it. I'm going to show you on Euro USD what I mean, but typically Monday will be shorter moves, range-bound moves, in the same way that the Asian range, if you were changing, everyone knows here, right? If you're trading Asian range, you know that you're not going to get a huge move out of it, right? Everyone's aware of that, yeah? It's going to be wicky, it's going to be up and down, and ultimately it's probably going to get manipulated at some point. So if you're trading Monday, it's going to be a short move. That's one of the reasons I stopped trading it, because my trading setups work on the basis of the taking liquidity both sides of the marketplace. I want to take multiple liquidity points out, and I'll be trading in line with the higher time frame trend, so I can get big moves. Okay, so Monday for me is generally a no-go. Now, if you
I have a question.
Of course you can, yeah.
How can we implement the Sunday open level correlated with the Monday closing into the directional bias of the week, depending on the high time frame?
I think you're talking about a ICT concept, and personally, I don't trade that one. I know that there is.
Okay, great.
Yeah, I know that there is a strategy around that Sunday level opening or the Sunday midnight open level. I personally don't trade it. I don't understand it fully, I'm afraid, but there may be something that if you learn I'll be all ears to hear it. Where I got to with ICT is I took out what I needed from it to master my trading, and then kind of I didn't really learn anymore. It's one of the things I might visit back in the future, but yeah, I'm all ears if you find out about it, but it's not something I understand fully. But I know I have watched videos of his where he does talk about that Sunday open. I think it's a level, from what I understand, let's say that's the Sunday open, I think it's a level that you can expect manipulation of or expect price to return to.
Yeah, basically, he's talking that on Tuesday, London session should not, would be the Tuesday, Wednesday should be the high of the week, and then you should trade to the Sunday open. Yeah, because sometimes the accumulation areas are already ready to push the price higher. Yeah, in order for you to not get.
Yeah, I think it's horses for courses. Which I appreciate some of you not British might not understand that.
I'm sorry, my English is really bad.
So I think
I'm English and I don't get that.
Horses for courses is like there's let's go another one. There's many ways to skin a cat, shall we say? Okay, it's kind of
Yeah,
the
that's
same thing
that.
for me. I'm looking for a manipulation of Monday. Now that probably incorporates the Sunday open price. I don't physically look for that Sunday open price, but what I'm looking for is a manipulation of the Monday range, and that for me then is where I then start looking for reversals. So I probably factor in what ICT teaches without even realizing it. And this is the thing about ICT, is that I think that his is a method that you can use. There are other methods that probably incorporate a lot of what he talks about. I like to simplify things as much as possible, which is why the Power of 3 is really good, because accumulation, manipulation, distribution, really, really simple and easy to understand. And it doesn't have to involve certain timeframes and certain days and things like that. I may be missing a trick ultimately, but it served me well quite far. Okay?
Yeah, I know.
So, accumulation is on Monday, okay? What we're then looking for on our Tuesday, okay, is a manipulation of the Monday pricing level. And what we'll often have in this as well is price will normally move up to maybe a daily level from way back when. Okay, so there's a dual purpose here. It's going to manipulate out all those orders that have been collecting on Monday, kind of early Tuesday, and then sometime between Tuesday, New York, and Wednesday, New York, you usually have this area, which is usually our high, or if it was a bearish example, our low of the week. Okay, so Tuesday, I am looking to enter trades. But again, I understand that they have a shorter time to play out, okay? What I mean by that is, I'm not looking to get into a trade on Tuesday and expecting it to continue forever and ever and ever, amen. For me, I understand that Tuesday's move, especially if it's a London move on a Tuesday, is going to be short-lived. It's probably going to take out some higher time frame liquidity to the left, and that move on Tuesday is going to finish. So I'll start my trading week on a Tuesday usually. Anything I'm taking on a Tuesday, I cut short. So I might take my full profit out a little bit earlier than normal. I might take out, say, 75% here and then finish the trade completely here, rather than, later in the week where I may take, let's just make that there. So if I was trading later in the week, for example, I might take 50% here, another 50% here, and then, my final TP, at the end of the week, somewhere around there. Trades I'll get into kind of Wednesday, Thursday will normally allow me to continue a lot further. So if I am trading on Tuesday, if I do get a really nice kind of external liquidity level swept, a lovely little daily AMD within here. So that might be Asian there. I don't know is this too small? I'm not sure. Might have an Asian range there. Then we have our little manipulation here, which is our green level, okay? And then we have our distribution for the day like that. Okay, so within this zone here, I'm looking for the same things. Let's move that out of the way so you can see that. So you can use the Power of 3 within each other. So I've got my weekly Power of 3 concept that I've got in the back of my mind. I'm then on Tuesday, I'm expecting a accumulation, which is our Asia range, then a manipulation, and then the distribution. But for me, I know that's going to be a shorter move. So ultimately, I'm taking my profits a little bit sooner, okay? Wednesday onwards, this is where, for me, my trading week really starts. So this is the high of the week, okay? The hot W, as I call it, high of the week. This, for me, is where I can start getting really excited. And this is why, guys, I don't know if you've ever not fully understood, this is why sometimes you make more money on Wednesdays, Thursdays, and Fridays than any other day of the week. That is because typically the manipulation, the major manipulation of the weekly cycle has been completed, and all of what the algorithm is trying to do is to try to take out or buy in people early in this move, okay? That has been completed, which means people that trade on higher time frames, like swing traders that were expecting a buy position or have sold early and now have been taken out, this move here has manipulated them, and by coming back down, it's then taken out the buyers. This move here has manipulated them, so it's it opens the floodgates, is the way I look at it, which is why then you get these bigger moves all the way down. Okay, for me on a Wednesday onwards, I'm starting to get really excited because I'm looking for the high of the week and I'm looking for a reversal. So this is where I'm trying to find my key reversal for the week. This is where, for me, I start getting excited and thinking, do you know what? This is where I can get into a trade and I can hold it for a couple of days. What's great then about Thursday and Friday, okay, so let's say you do catch the high of the week and you get that reversal, you get a really nice entry up here, okay, and you hold down. For me, I might take most of my profit off here or at this low to the left, but I'm still going to be holding this down for as long as I can, because through testing, through back testing and forward testing, I've learned that typically once the reversal has happened on late Tuesday or early Wednesday, typically I'm now going to be seeing a longer move. So for me, what I can do is I can take profits here, but I'm always going to be leaving something in on a Wednesday, expecting it to move further down, okay? What's great about Wednesday and Thursday onwards is you can stack positions. So, you know, and this is obviously, we can't see any price here, okay? What then we're looking at, so you'll notice when I'm posting kind of wins, you'll see that sometimes I've got kind of 4 or 5 positions on one pair, and that's usually because throughout the week I'm stacking positions, I'm adding positions in, and then when I see, you know, a major liquidity level to the left be taken out like that, that's when I can take the majority of my profit out. But what's great about Wednesday and Thursday, and one of the assumptions that I would say you should always have, is the distribution phase happens late Wednesday to usually kind of midday Friday, okay, and then there's often a little bit of a reversal on a Friday, again, as most of you probably know. So you can just continue price. If you can get a bias from Wednesday, and let's say that bias is in direction of the major trend, you can then just keep adding to it. So many times I've been caught out on a Thursday thinking I see a reversal and then it continues, even though I know now that actually on Thursday the most common trade that you're going to get into is a continuation trade. Equally, on a Wednesday afternoon or a Friday morning, the most common trades that you're going to get into are going to be continuation trades. So if you've got a major bias for the week and it's late Wednesday, it's all day Thursday, or it's early Friday, take the continuation trade, because I would say 70-80% of the time you're going to be correct. So we can use this in our weekly cycle. Okay, now I'm going to go back and I'm going to show you over a couple of days. Let's just go into our charts over here. Let's find ourselves a random Monday. So let's use this nice trending market position here. Let's do a little line where we've got a Monday. So there's a Sunday, Monday, Friday. Okay, cool. So let's zoom into this. Gone. Okay. Let's have a look at these price actions. So that is our Friday. So let's move that across. So Sunday. Okay. Oh, sorry guys, hang on. Just moved you. Okay, so this is Sunday open Monday. Okay, let's draw around our Monday. That's quite a wild Monday, as you can see. So this is our entirety of Monday like this. It's not particularly rangy. I mean, you could link it to that. It's kind of range bound. It's a pretty wild Monday, to be fair. And these are the Mondays that would often psych me out. I'd get into them, I'd be like, oh my god, Mondays are great again. I'm going to start trading Mondays. They're amazing. Look at, well, we moved. What did we move? Oh my god. We moved 70 pips on a Monday. That's it. Mondays are amazing again. And then the following Monday, it just ruined me. So this is our Monday move. Okay. Quite a big Monday move. Okay. What have we got here? As you can see within that, we've got accumulation, manipulation, distribution, which is great. So you'd have had a setup there if you took it. Tuesday, remember this is when we're looking for our manipulation move. So you can extend this out to here. Okay. Again, similar setup. We've got accumulation, manipulation, and then distribution. So you had a nice short Tuesday setup. So let's say I was trading the AMD of Monday. I would have taken something like this. Okay. I would have understood that it's a short trade and I would have taken my full position off like that. Okay. In the concept of the weekly cycle, however, this here is our manipulation. So we can mark that on there as manipulation. And then you can see for the rest of the week, we've gone bearish. And what has price done up here? It's taken out a major liquidity level to the left and it's tagged into a supply zone to here. So it has reached ultimately a liquidity goal. Hasn't quite swept that external high. I would have preferred if it did that, as you can see. But it has reached a weekly goal. That has been our manipulation of the week. And then the rest of the week will then generally go bearish. So you can see from here, that's our... oh, we've got a big old manipulation. Oh, hang on. Sorry guys. Apologies. We've actually got a really short manipulation this week. Okay, so our manipulation is down here. So accumulation, Let's mark on the full day. So that's our Tuesday. Okay. We've then got our manipulation, which comes down here. And then our rest of our week, yeah, Tuesday, Wednesday, and Thursday. Okay. So that is then our distribution for the week. Okay. And that has then created the liquidity goal. And you can see here what it has done. It has taken that external liquidity out from here. Okay. So external liquidity. Let's mark that on so you can see it nice and clearly. Get rid of that line so we know where we are now. So it's taken out external liquidity. So the reversal this time is actually quite quick. But you notice I say what did I say in our example back there? Where's it gone? Where have we gone? I've lost it. Okay, so accumulation on Monday. Okay, we didn't really have an accumulative day, but again, I'm not trading it, so it don't really matter. Frame it up, that's accumulation. With manipulation, we're looking for manipulation between Tuesday to Wednesday afternoon. So at any point through Tuesday to Wednesday afternoon, okay, we're allowed to have our manipulation of the week. And what we had here, as you can see, data point, I hate it when it does this. Lost it now. And what the date was? No, it's gone.
28th of April, wasn't it?
Was it April, was it?
I think so.
Yeah, okay, cool. So as you can see here, our reversal happened at New York, literally on the nose in New York, so 2:30, 2 o'clock, our reversal for the week. So this now is our low of the week, okay? That's the expectation anyway. If we reach a major reversal at either Tuesday or Wednesday afternoon, that we can then assume is our low of the week. So if we then get some bullish price action from here, we can then, for the rest of the week, we can just buy. I can't go down to lower time frames, unfortunately, guys, because we don't have the data set. But you can see here that we can just continually get into buys. And every single one of these retests, you could pretty safely get into and assume that the market is going to keep going long because of the power of 3 weekly cycle. Our accumulative day, which is Monday, although it wasn't that accumulative, and this week we've then had our manipulation day, which has then taken out external liquidity to the left. And look at those liquidity points that it's taken out. Look at how much liquidity it's taken out of the marketplace. We've then had our reversal, and then our expectation is that it's going to take out some highs to the left. And what it has done in turn is it's taken out this trend line liquidity, okay? And ultimately, if you'd been targeting that liquidity, if you'd got into that one, you'd be laughing. Without going down to a lower time frame, I'm not sure, but it does look like there's a pretty good setup in there. We've got a little manipulation, as you can see, like that down there. Okay, and then obviously market moves up. Let's move on to the next week. So where are we? So that is Thursday. And then you can see throughout Friday, it does have a kind of a larger reversal. Where are we in terms of trend on this marketplace? Okay, so, right, this is why it's been a bit shit. We've literally higher time frame reversed. Okay, let me move down into this trending market and we can see it a little bit easier, okay? So let's have a look from here. So Sunday, Monday to Tuesday. So let's frame on our Monday, okay? So this is Monday to, what's that? Friday. Okay, so that's our cumulative part of the week. Okay. Here we've then had, let's have a quick look. Okay, so we've had a continuation down. We had a continuation down through Tuesday, okay? And then it's a bit of a mucky one, this one. This is our manipulation. This move here. So this effectively would be classed as the entire range bound part, which is sometimes why you have to wait for the Tuesday to play out to really get that bias, okay? We've had our accumulation here. This is our accumulation. It has rolled over into Tuesday on this week, okay? This is our manipulation, which has taken out those highs to the left, cleared out liquidity, and you will see that when that major manipulation move happens and the reversal happens, it will often be quite extreme like this. So this one, really extreme reaction. This one, really extreme reaction. And then for the rest of the week, we've been fully bearish, which means if you'd cottoned onto this quick enough, and we didn't even get a reversal on the Friday either, if you cottoned onto this quick enough, you could have got yourself into some really, really profitable trades for the rest of this week. That move there, the The reversal there is really clear now in this trending marketplace. All of these moves here, you know, let's say you'd got into that one, okay, and held that down for the rest of the week. You got yourself a lovely 12. Maybe there was a position here. That's definitely a lovely little accumulation, manipulation, distribution there on Friday, which has been a great trade. And there was various others throughout there as well. Okay, as you can see, I'm sure if you drop down to the lower time frames, you would have seen it. So in that week, we had a bit of a mucky Monday, to be fair. But then we can, you know, clearly see that we are expecting bearish price action. So accumulation there, we would have liked usually the manipulation to sweep out the highs, but it didn't. What the manipulation did this week is it just swept out some liquidity to the left. Then the higher time frame moved off. Okay, this is our Monday from the following week. I'm just going to draw one more on, and then we're going to have a look at a couple of other things. I'm just conscious of time. So accumulation here, manipulation on Tuesday here, and then our distribution down here. Where are we to Friday? Yeah, Friday, and then obviously the Friday reversal, which often happens, as you can see. So that's our AMD for that week. This week here, so this is Friday reversal, Monday. So again, a bit of a mucky one this Monday. It's a Monday, Sunday. Let's have a quick look. So Monday is our accumulation. Which then rolls down into, so this becomes our range effectively, okay, because it rolls down into, we don't get any manipulation until we get down to here. Manipulation on this day, which like I said to you, it can happen on Wednesday, has happened on the Wednesday. So this is manipulating highs to the left, as you can see there. Then our extreme reversal, you see that, okay, our extreme reversal, and then for the rest of the week we've been bearish. So, you know, as with every trading strategy, it's not going to be picture perfect every single time, okay? Sometimes it will be a little bit subjective. Sometimes you just got to be conscious of the fact that Tuesday, Wednesday, we're expecting a major reversal, and then we're going to expect a trend for the rest of the week, sorry. This one, what do we have? Monday. Let's just draw this one on, and then we'll move on. Okay, Monday is our range, accumulation. We then have a couple of manipulations here, but ultimately the major manipulation is that one. Okay, to the left, because we're in a bearish market. And then we have our distribution move, which takes us down to, oh, actually, it's a weird week. Okay, no, tell a lie. So that's actually our manipulation all the way down to here this week. And then our major move from Thursday to Friday is all the way up to here. Okay, that's our manipulation. And then we have our distribution here. Okay, so you've gotten some lovely trades on here. So Tuesday, you'd have got yourself into maybe a nice little sell from that external liquidity. Okay, Tuesday would have got ourselves into this position here with that high to the left. I would have taken out all of my profit there because I know it's a Tuesday and I'm expecting this to not move much further. And then we get our extreme reaction, which if I zoom back is probably off the back of a liquidity area here. And what have we got over there? Okay, so we've got a nice zone here, which is rejected. And then we've got some, oh, come on. And then we've got some here. Where are we? Okay, and then we've caused our low of the week. Okay, major reversal on our Wednesday afternoon, and then the rest of the week has been our bullish week. So this is a bit of a rejective week. Okay, so look, use this. I'll record this video for you guys so you can go back and look over it, but you can see how effective this can be. Any questions for me? I know we just covered off loads of information all at once. Any questions?
Yeah, one from me. So after each of those manipulations, you'd wait for that MSU setup to get into the bigger distribution move.
Yeah, so basically this doesn't change any of the other strategy that we've learned so far. So obviously we're looking at a 30-minute chart here. As you know, I wouldn't trade a 30-minute chart personally. I'd be looking for entries on kind of a 1 minute to 3 minute chart, maybe a 5 minute. So we're going to be factoring, what I'm trying to give you today is an understanding that there is a higher time frame cycle going on within the marketplace each week. Okay? And what I want this to enable you to do is to change how you might be handling and managing trades based upon the day of the week. For example, let's say, Dan, you have a really beautiful looking, this is a good example. let's say you were expecting, because we've been bullish for the last couple of weeks, bearish for the last couple of weeks here, as you can see. Let's say you were taking this trade like this, okay? Now what you can do is, acknowledging that it is Tuesday, you can expect, because this wasn't a major level here, this was like an internal liquidity and there was a demand zone below, so it wasn't really a key major area I'd be looking for the major reversal from, but I'd be expecting it on a Wednesday. So again, that will help me. Let's say you were expecting this because of the setup, you took some profit off here, but actually you're expecting price to continue down. Knowing that it's a Tuesday, you could look at that and think, well, do you know what? Actually, there is a risk here, because it's Tuesday, that this is only going to be a short-term move. So I'm going to manage this a little bit differently on a Tuesday, and I'm going to take all of my profit out at that low. You'd got yourself out 3.4R. If you're trading 1% per trade, you're taking 3.5%. You could be done for the week then. 3.5% a week, every single week, 7%, 14% a month. You'd be pretty happy with that. So what I want to teach you is that the strategy, the kind of the standard MSU setup with the various liquidity points that we look at, that remains exactly the same. Okay, the way you get yourself in and out of trades remains exactly the same. But what hopefully this will give you guys an understanding of is what's likely to happen in the marketplace based upon the day of the week. Okay, and if it is a Tuesday and you're trading like this, the expectation that this will continue going on for the rest of the week will be lower than if it was, say, a Wednesday. Okay, when you take a Wednesday trade, okay, and you can see it reverses here anyway, when you take your trades on Wednesday, maybe on, let's say you get in on Thursday, you can then expect it to continue moving up. Now, this is a bit of a confusing one, admittedly, because this is now a counter trend play, which is why ultimately it didn't keep going up and it's come back and retested. But you can see here, for example, with these bearish moves, let's say you'd got into, this is quite a good week to be fair, let's say on Tuesday you were thinking, do you know what, I'm going to take a trade. You know, because it's Tuesday, that the likelihood is there's going to be a major reversal. So actually holding your position from here all the way up to this high to the left, yeah, it could happen and you might want to leave a little bit on, but the chance of it reversing is really, really high. So the way you get into the trade using the MSU setup, Dan, remains exactly the same. However, what you might think on a Tuesday is, actually, I'm going to manage this a little bit differently. I'm maybe going to take out most of my profit here to this high to the left. And then if I get the major reversal, I can then think, do you know what? Now we've had a major reversal. That's probably the high of the week. So now what I'm going to be doing is I'm going to be taking this trade on Wednesday morning. Because I've had a major reversal, I'm in a bearish marketplace. And now my assumption is that it will continue going for the rest of the week. So entries remain the same. Management, you might be able to tweak slightly. Like anything, team, what I need you to do with this is I need you to go and test it. Okay, don't just take my word for it. Certainly have it in mind, but I need you to go and test it now. I have slightly different rules based upon the day that I'm trading, through learning the hard way of just getting stopped out too many times, and back testing, probably not as much as I should over the years, okay, as we, I think, are all guilty of. But go back and test this. Go onto your FX replay or go onto TradingView replay and test it, and see if your rules need to change. Your strategy might not need to change. Like Nikki, for example, I know you trade really, really tight stops. You get into your positions, you get out. This may be, useless for you. It may be. But you never know. On a Wednesday, you might be able to get into another one of them 27-hour positions, potentially.
Awesome.
Any other questions?
No, in the comment section, I sent some 4 photos of all the possible AMD. I've been trading AMD for a year now.
Yeah.
And it's a great strategy. You can check in the comment section.
Yeah.
I've sent 4 types of scenarios you can see always in the market. It's a very powerful strategy. I encourage everyone to test it and use it.
Okay, thank you very much. Any other questions about what we've been talking about here today? Okay, cool. So I'll move on. So this was kind of the bulk of the webinar. This is what I want to cover off. Okay. I think probably what I'll do is I'll talk about the trade kill zones, because it's really, really simple and easy to understand. How many of you factor in particular times of the day to your trading? Oh, actually, another question.
Absolutely.
Yeah. How many of you trade whenever, wherever, and you don't count what time of day it is? Is that any of you?
Both.
Yeah, I do that shit.
Yeah, you trade whenever.
I don't know. Like I am aware of the weekly cycle, but I trade purely like price action. When the price give me an opportunity, I just take it.
Yeah.
If it's presented to me, my strategy, I'm right.
Yeah, fair. And I think that's the right way to do it. For those of you who aren't aware, there are two areas of the day where there are larger amounts of orders being processed in the marketplace. So those two areas are the London Open, which is here. Okay, and I'll tell you what I'll do. I'll go down to a lower time frame. We're going to lose our bars, but let's fuck it. Okay, so where's that gone? Okay, so this is Asia, the London Open, and the New York Open. Okay, and this couldn't be a more perfect way of showing it to you. Okay, that first hour of the day when these markets open, you'll usually have a larger influx of orders, which is why price will move often quite rapidly. Not always, just like anything, but it'll often move quite rapidly. Certainly when you have a news day, you have big moves, okay? But that first hour of the day, for me, that's when I'm looking for my trades to set up, okay? There's a couple of things that happen in both of these times, and this kind of leads me on to the last part of our webinar tonight, which is about the New York trap, okay? What London will usually do is it will usually, at some point during London, print the low of the day, okay? It doesn't necessarily have to be that time where I'm looking at, so I'm looking specifically at that time. London technically opens anytime after 6 o'clock, okay? That's where Frankfurt is just opening and London comes in, so kind of 6, 7 a.m. But what will usually happen is London will create for us a low of the day. And that low is very rarely invalidated. You can see here it's actually held quite well. It did get swept, to be fair. But most of the time, London will create the low or the high of the day. It doesn't necessarily have to be at the open, okay? But it needs to be at some point during the London session. So this is our high of the day here, as you can see. Change the color so you can see it a bit easier. Okay? And again, these are things that are not absolute matter of fact. These aren't necessarily trading strategies. They're just added confluence to add into your trades, okay? Usually London will present for us a high or a low of the day, and this is very rarely invalidated until the following day. So you can go back through your charts, you can see this, and it will usually hold almost every single day. So we're after Asia finishes, which again I mark on at 6 o'clock. There's normally something printed. And look, this is not me saying trade off it, okay? But what I am saying is, do you know what? If you see a really nice move away from it, okay, then you can use that as maybe a confluence for maybe where the daily bias is going. For example, if I see that nice move like this, so accumulation here, really tiny manipulation, and then distribution, I can say, well, do you know what? We've had a nice move down. We're in a bearish marketplace. That's probably the high of the day. So if price comes back to test it like that, then maybe if I get my setup and I get my MSU down here, maybe if I get my setup, is this going to be then a really successful trade? But I've got to factor in also what day it is, which is Tuesday. So now I'm not going to be holding all the way down for the rest of the week. I'm going to be taking out my profits there. This one did look like it held for the week, which is great. So that was now our major reversal for the week as well. But ultimately, it's had taken some news for us to do that. So again, the London high of the day or low of the day can be an added confluence for you to say, do you know what? That's probably going to hold. That one failed, as you can see. But you'll see that most of the time, London will print a high of the day. Or a low of the day. Okay, we're in a bearish market here, so you can see it's generally been highs of the day. And you can go back through your charts and you'll see this pattern will occur over and over again. Okay, real good one there. And then we've got a kind of 8 o'clock where you've got a large volume of orders coming in, maybe a nice setup from here and then continue on. Okay, so that's the first thing to understand. For me, if I'm taking a trade, I'm going to be entering usually in London. The reason why is based upon a couple of things we've discussed today. AMD, firstly, I want my accumulation, manipulation, distribution, okay? So for me, that doesn't happen until London opens. So how many times have you entered a trade in Asia? And those of you who are newer to trading, and I know, Jake, you and me have fallen foul to this enough times in the past, you enter a trade in Asia because it looks really, really sexy, and you get swept out, right? That is because the AMD hasn't manipulated yet. Simple as that. The Asia range is often manipulated, okay? And this will happen over and over again. Now, that for me will normally get me into my first setup of the day. I'm looking for some point in the London session to get into, in this marketplace, obviously a short, okay? Didn't really get manipulation on here, but we got a clear push down here, and the bearish marketplace might have got into my short here. That's around, 9 o'clock. I'm pretty happy with that, okay? So that's the first thing you should be looking at. When this mass volume of orders influxes to the marketplace, that's where we can start entering and taking trades. The second thing that happens is when New York opens, it creates a trap. And this trap will trick people into thinking that the market is going to reverse. And I use this, again, almost every single day. So we've taken out some liquidity, okay? What a lot of traders will be seeing is, right, New York's open now, it's 12 o'clock or 8 a.m. where you guys are. And I'm going to zoom in. I'm going to lose it. I know I am. Hate TradingView. Why have they not fixed that on TradingView? It's so ridiculous. Drop down a time frame and it changes where you are. Why did they do that?
Replay.
Oh, yeah. Yeah, we had that problem yesterday, didn't we? Right, let's just find it. I'm here now.
Yeah, I kept losing everything.
Yeah. Right, I'm here now. Okay.
Check.
Yes.
Someone's asked in the chat what video they should watch to understand MSU. What video on YouTube is it?
I need to do a full video on it, is my honest answer. I can't get the bars for this part anyway, let's move on a bit. Yeah, I need to do a full video on it, is my honest answer. I haven't quite done a video on it yet, but that will all come as part of the mentorship. I think one of the webinars, potentially, I know I found it for someone the other day. Do you know what I'm going to say? Watch them all, because there's lots of good stuff in there.
Yeah, like that.
Right.
That's cold with it, you know.
Okay, so let's use this poor example of the London one, but will you see the trap here? Okay, so what usually happens, okay, we are, as you can see in this marketplace, we are bearish, okay? So what usually happens is when New York opens, it creates a move where the volume of orders come in, where people take profit. So a lot of people trade London and they stop trading, so they take all their profits out. And then what happens is people from over on the west side of the world will come into the market and they'll see it and they're like, right, okay, we've got a nice bullish play here, okay? And they'll think, right, let's buy from this. We've taken that liquidity to the left here. We've raided those highs. Brilliant. Okay, let's buy. And what the algorithm will do is it'll trick people into thinking that price is going to go higher. So this blue section I mark out because that's kind of the major area I'm looking for, okay? You can see here, this little area here with the imbalance left behind, this looks like a really good buy setup because we've got imbalances left behind here. We've got resting liquidity sat below there. You know, that's kind of, you know, if you were looking for a buy setup, that's as good as it gets. But there's a higher time frame. Oh no, I've done it again. Nikki, I did it again. I did it again. Right, here we are. That was a quick one.
Bar replay.
I know, sorry dude. Right, let's do it again. Right. Okay, so what happens is people get fooled into thinking it's going to go bullish. What have you had here? And this is where SMC market structure fucks you over as well. So look, breaker structure. Let's mark this on. Breaker structure. We got another breaker structure, which is brilliant. Okay, we've then my line's not working. Okay, we've got another breaker structure here. Then people go into this and think, do you know what? We've got resting liquidity, so I'm going to get into this buy, and then they get swept out. Okay. New York will usually print a trap every single day. It's one of the most common things that I'll see in the marketplace. And what you need to have is two things. You need to have an understanding of high time frame liquidity. So where is market likely to be headed? So in this example here, we are heavily bearish. So I'm going to be assuming that we're probably going to be going bearish at some point here. We've taken out buy side liquidity from an external range to the left here. We've not taken any sell side liquidity out. The sell side liquidity is currently sat there. So for us to consider a buy, you've got to be asking yourself, well, why? We've taken out buy side liquidity. We've not taken out sell side liquidity. Let's say that's our range here. Okay, so we're in a bearish market structure. Let's say that's our range. We've taken out the buy side. Idiot traders will then think that this is going to continue to go bullish. And of course, it doesn't go bullish. It creates a trap and it traps you out. Okay, and that will happen on a daily basis because the algorithm is after the external liquidity. That's where the meat is. That's where, you know, when you're like eating a really good piece of steak and like you save that really juicy bit at the end and you think, you know, you eat all the bit around the edges you eat all your chips, and you eat all your peppercorn sauce, and you save that little bit of steak for the end. This is the steak. This is that really lovely bit of fillet that you've been saving, okay? This is what the algorithm wants. That is where mass orders are set. Anything at the high or the low of a range, that is where mass orders are set. Whenever, even on the 3-minute time frame, I prefer these on a higher time frame, obviously, but even on the 3-minute time frame, whenever the buy side liquidity has been taken on one side of the marketplace, especially in a bearish market, and you can reverse this for a bullish market, the expectation is always going to be, well, it's taken its orders from here. The likelihood is it's going to continue down and take those orders. And then you can also mark these on as a trap as well. They're not the New York Open trap, but that in itself is a trap because buy side liquidity has been taken. We're bearish in marketplace. Sorry, we're in a bearish market where expectation is it's going to be going lower. Okay, I'll give you another example. This is the only problem with bar replay, Nikki, is that you don't have any bars for the next days. All right, let's move on a little bit.
True. I mean, either.
Right. Where's he gone? Okay, so again, we're bearish in bias. Okay, so let's just. Well, where was that from? Okay, cool. So you got another one here. So what have we got? We've got here a range. Buy side liquidity has been taken here with Asia. We've got our accumulation from earlier. We've got a manipulation. We've got a distribution. Okay. Did we take out that sell side liquidity? Well, no, we haven't got yet. We actually rejected it perfectly. So we've got a really nice rejection. We've come and retested this high of the day. And then we pushed our way down. So when New York opens and we get that influx of orders, surprise, surprise. I'm going to do it this time, Nikki. Look at that. Hey, we learned. We learned from our mistakes. That's the key to being a successful trader. Learning from your mistakes. Replay tool activated. So this comes in and it tricks loads of people into going bullish. This first hour of the day, usually New York will present the trap. We pop that on. What I would be doing, rather than doing what everyone else is doing, is buying from here. I would be looking for a sell setup. I'm going to be marking on my range like this. I'm going to be waiting for some sort of liquidity to be taken to the left. We've got a nice imbalance in here. We then start getting some rejection. We've got resting liquidity there. That for me is a lovely little setup. I'm now going to be literally targeting that trap. I've got my MSU probably somewhere in there by the looks of it. I'm now going to be literally targeting that trap for my first profit. And that's why I'm going to be taking most of my profit out of the marketplace. And then what does market do? It then takes out the sell side liquidity. That's now my full target. It's a Tuesday, so I know this is going to be a shorter move. So I'm in and out. Okay, so you can see how with a really good understanding of these concepts, you can stack them on top of each other, okay, and then get a really clear understanding of what the market is probably going to do at these various moments of the day. Now, this is, you know, probably a video that should be a lot longer than maybe an hour or so, and this I'm going to be releasing all of this stuff in the mentorship anyway. But you can see how you can factor all these things in. So now what day are we? We're Wednesday. Okay, so we're expecting a major reversal for the week. Okay, we know now it's Wednesday. Let's say I haven't traded the AMD of the London session, but you can see it's there. Accumulation, manipulation, distribution. Okay, for me now, I'm going to be looking for my major reversal of the week. I've already got a push down, so to be fair, I might be thinking, do you know what, we're bearish anyway, so, you know, this is heavily bearish marketplace. Let's see what we can do. Yes, Nikki? You have a question?
Yeah, back to the trade you were talking about before. I guess that was Tuesday. You wouldn't take that buy?
Would I take that buy? Personally, probably not. That looks like a news move. So for me, I'd probably be waiting for the... Yeah. That looks like, what are we, Tuesday the 5th of December. What news do we have on Tuesday 5th of December? Anyone? CPI, was it? I think it was CPI. I can tell you. Tuesday the 5th of December. Job openings, PMI. ISM services PMI job openings. So that's the 3 o'clock move. Yeah. Okay. So I probably wouldn't take that buy if I'm honest, only because I don't like trading just before news. 3 p.m. news isn't one that I would. So 3 p.m. I think is that 9 p.m. for you, Nikki? Yeah.
9 a.m.
9 a.m. Sorry, 9
a.m.
a.m. Yeah. So that news, I don't care about it as much, but I still wouldn't trade just before it, if that makes sense. So I'll be taking that trade. Yeah. It's the 1:30 news, which I think is 8:30 for you. That news, that's the one I'm scared of. Okay. What I would be doing is I'd be then getting a second sell from this. So the way I trade news usually is I'm going to be looking at what it does to price ultimately. If it takes out some sort of external liquidity, which it has done here, I'm then going to be looking for a reversal from that. So there's another trap that I trade, which is the news trap, which you can see prices created here. If within the first 30 minutes of news, it takes out some sort of external liquidity area and then reverses, usually that move will not hold. So I wouldn't have taken that buy, but I can see there I've got an MSU set up here. So what I would have done is I'd taken that sell. And for me, then I'll be using that as a second trap. So what I would have probably done is come out of this here. And if I feel like I needed an extra trade or wanted an extra trade, I'd then be trading into that trap and then going from there. So yeah, I wouldn't have taken that buy necessarily. But if I know the way that you trade, that's a pretty clean setup for you, isn't it?
Hey, it looks very good.
I'm gonna draw your trade on for you. You ready? You ready?
No. Done.
Ready? I got it.
That's it. Done. That's it.
Got it. And then a million.
I mean, you don't even need to know how to trade. You
a million
just
R.
need to know how to use your risk.
There you go. A million R out.
I mean, when it's 2 pips, it's very easy to get like.
Oh yeah. Sorry.
20,
to be fair, that was quite a small pip for you right there. Let's go back. What was it? That was 0.7. That's low even for you. There you go. Boom. That's your trade done. Do you know what? 16R though. You got to be happy with that. Do you trade through news though?
I mean, sometimes like I'll take a setup that's before the news, and I'm like, all right, I'm kind of hoping if it goes in the direction I want, but if it doesn't, yeah, it kind of pops you out a little bit further than you stop.
Yeah.
Right. But then you just wait for it to like settle and do what you do. See if it's still in your favor or if it's flipping around. Right.
Fair. Yeah.
I mean, I used to be so afraid of news because you never know where it's going, but again, once I understood probabilities, like you flip a coin, 100 times, you may get, 70 times heads and, 30 times tails, and then you flip it again 100 times, then it's like 80 tails, and, so it's really
random.
To me, it's just a coin flip. Yeah, it's random.
Yeah.
I mean, there's an algorithm to the market, but it's random, and, I'm okay with being a 20% winner because my 20% is going to eat up someone who's at 80%.
Yeah, that's a tough psychological barrier for a lot of people.
Well,
absolutely.
I think yes, but you have to get over losing because I accept the loss, right? I'm accepting. I'm doing 2 pip stops for the most part. I mean, do I extend it a little bit? Yeah, sometimes. But I only have 2 pips of whatever I'm risking, and it's really easy to get over. But when I'm doing a 30 pip stop, and there's a lot of time waiting to get stopped out, yeah, that hurts a lot because you're already thinking about it for so long.
Yeah.
I ripped that Band-Aid off quick, so I keep my mental together, and I don't get mentally hijacked. Now, yes, if you suffer a lot of losses, even with 2 pips, yeah, it hurts, and you still can feel the pain, but it's different.
So what percent are you risking with if you're doing like that's like super tight?
So like for CTI, I was trading the challenge account, which is the $2,500 account. So they give you $125 you can lose for the day. So I take 5% of that, and that's what I'm trading, which is $12.50. So I'm putting in, I believe it's like a 0.32. Because 2 pips, or so actually it's even $6. Sorry, I'm even trading like of this, or no, 12. It's 12. Yeah. So I put in a 0.32.
Okay.
When I trade, right? Because that's as much as I can do on a 2 pip stop. But it doesn't mean I don't enter again and another entry. So it's just like my first initial entry. I'm putting that, and then it's 2 pips, and when I see it's in my favor, I find the next entry, and I do it again. and again.
Nice. And yeah, that's what
So.
it links all the way back to what we were talking about earlier. You know, everybody's got to develop their own trading style. Like for me, that sounds horrendous. I would hate
that.
Sounds
like
I would hate to trade like that.
How am I meant to do that work? I can't do that.
And for me, I'm not looking for swings effectively, but I'm looking for trades where I can really trust where they're going. And look, Nicky, with the greatest respect, what you're doing is you're kind of, you know, you clearly have strategy to what you're doing, but a lot of your entries, sometimes they're kind of like hoping that they hold, aren't they? Because, you know, you don't have to move that.
Not really hoping. No? I just, when you get news, it's like, you don't really know which way it's going to go. I mean, you could have an idea, but like, you know, like USD news, like it shows the numbers and you're like, okay, it looks like it's going to be good for them. And then it's bad, right? Yeah. Then the market shoots up on this pair, right? So it's like, we don't know until we know.
Yeah.
But besides news, like I'm not really hoping and wishing because I see how the market moves and bounces off of, you know, order blocks and fair value gaps. Like there's all these concepts, you know, and they're ideas, right? So they all layer. And so I'm like, okay, I see that. I'm taking the risk. I'm willing to risk this much on that move. Okay, it didn't work. Maybe I'm reading it wrong. Let me flip my, let me see how it could still be a buy, or let me see how I'm wrong and it's selling now, right?
Yeah.
And, you know, so it's, to me, it doesn't seem as risky. I think for me, it was always riskier when I would just stick to a bigger idea and hold.
Yeah.
And like a 30 pip stop, and I'm like waiting. And then by time you already know, like, hey, all right, it's not selling, it's buying. I already lost 30 pips, and now like the entry's gone, right? Like, or you feel like it's too far gone.
Yeah.
So to me, it just made more sense to come into trading like a scalper, but be an intraday trader on the holding. Like, so.
And like I said, that moves exactly back to what we were talking about at the start. It's about finding your own personality in this game. It's about making 100%. Sure that you toy with various different strategies, whatever they may be, you know. And a lot of you guys in this chat today, you've put your faith in me, which is great, and I'll teach you everything I know. But you might get to a point in 6 months' time where you look at what I do and think, do you know what, this doesn't suit me. You know, I get an hour at the charts per day, and actually what Nicky does suits me better because I want to be getting quick profits in and out. For me, I'm holding my trade sometimes for hours. Like this one is a good example. We got our big reversal. It's our Wednesday day. We're expecting our reversal. We've got a bearish week anyway so far, and we're in a bearish market structure. So for me, I'm expecting a reversal. I've got my trap here, but I've had to hold this for, you know, 3 hours in order for me to get my profit out. And, you know, by that point, Nicky, for example, let's say he'd caught the same trade, he might be out here with his 2 pip stop, he might be out here and be taking his profits here. So I think, you know, you've got to be trading to whatever suits your own mentality, your own personality. And I think the important thing for those of you who are still learning, maybe those of you who haven't yet hit your consistency yet, what you need to be doing is just being like a sponge, absorb as much as you can, learn as much as you can. You know, people vilify strategy hopping. I think that's wrong. I think you should be allowed in the early days to strategy hop so that you can learn what you like and what you don't like. It's just, you know, it's common sense really. So never be afraid if you're not quite where you need to be. Never be afraid to learn more. I'll teach you everything. Say again.
I feel like if everyone spent a year strategy hopping, you actually find yourself realizing what personality you have when it comes to this. You find out whether you like just being patient and waiting for these super high time frames and just swing trading, and you can do it on like 10 pairs because you're not really looking at the charts that much. Or if you want to day trade and you want to, you know, be on the hourly charts, you tend to like just look at maybe 1 to 2 pairs. That's it. As to not get too confused. And then if I haven't actually seen any of Nicky's trades, but I imagine he's on like the 1 minute or less. It's got to be right with 2 pip stop loss. It's got to be.
I stay between 5 and 1.
5 and 1
if I'm really feeling froggy, I'll go to like 30 seconds.
Like, I knew that shit. I knew there was going to be a 30-second trade in there.
Madman.
It's very rare.
So yeah,
it depends on the pair, right?
You obviously you understand your personality over time. That's just part of the journey as well in itself. So
Yeah, that's it.
100%.
Right, guys, I've got another few minutes left. I've got about 5 minutes or so. Appreciate your time and kind of sticking with me. There's been a lot of information today. I'm recording this as we speak, so this is going to go straight on YouTube. I'll get it in the Discord group because we've gone through a lot of stuff today. This is stuff that's taken me years to learn, and we've talked about it in an hour, so it might not be fully 100% in your brains yet, so it might need a rewatch. But before I go, is there any questions? Does anyone have any questions? Would anyone like me to recap over anything?
I've got a question.
Go on then.
Can you do a kickflip?
Mate, I skateboarded for like 8 years. I could kickflip, I could heel flip, I could hard flip.
Oh, I want to see some of this shit. Come on, you need to send
Mate,
me the video.
I'm 35 years old.
On the channel.
I'm 35 years old now. We didn't have camera phones back then, mate. But yeah, I was big into skateboarding. I can still ollie. I ollied over my my friend's like rucksack about 2 years ago, which I was pretty proud of.
So you might not still be able to ollie.
If you do mobility stretches and you stretch, you should be all right. You won't break.
Yeah.
I'm gonna say Tony Hawk can still skateboard, and he's like 50 something. So there's no excuse being 35.
He does do it every single day though.
Yeah, that is true. Yeah.
I think I've been on a skateboard twice in the last 15 years.
I think you're about as good as Tony Hawk when it comes to trading. Do you know what I mean?
Oh, I love that. Appreciate that.
Love it.
There is.
I wish I had money though. One day.
Yeah, it'll come.
It's happening.
Hey, Jacob, I'm going to show you something though. You'll appreciate this.
It's not about the money though. That's the thing.
You should also make a video on YouTube called "Trade the Trap." Try like trading towards the trap.
Hang on, wait there, stay there. Can you see this? No, you can't see that. Wait there.
We see your chart.
See my charts?
Yeah.
Can you see that?
We see a video.
Yeah. I'm literally... Three-part series is going to be. Today I'm going to talk you through the theory behind trading the trap. Boom. Could you hear that? Could you hear the audio?
Yeah.
Trading the trap.
Mate, I'm already doing it. I'm literally in the middle of it right now. Also, look at this. Look what my girlfriend bought me.
That's brilliant.
A new puppy.
Oh, that's well cute.
We got a new puppy.
Boy or girl?
For the girl. So for those of you who don't know, we lost our little dog a couple of weeks ago. So we've just been left with this bugger now, who is the most needy animal you've ever met in your life. Will not leave our sides. And she's 8 years old. She's never barked or cried ever in her life. Now she does nothing but bark and cry. So she's feeling a bit sad. She's lost her big sister, which she's known all her life. So we got a new puppy arriving next week, which is going to be very exciting. So yeah, can't wait.
Nice.
Can't wait.
Oh, that's so good,
Congratulations.
man.
What a Christmas.
I know, and it's been really tough because we lost this one's big sister, and I was like, right, I'm buying a dog. I don't care. So we've had 3 dogs in our family since we've known each other. We're now down to 1 dog. I'm not doing it anymore. The house just felt different. It just felt. I don't know how to explain it. It just felt cold and just
a bit more empty.
Yeah. Where's my window gone? I can exit this. How do I exit screen share? Hang on. Yeah, it just felt wrong and just empty. So I was like, I'm buying a dog. And there's this particular dog called a Samoyed, which I want. It's like a big white fluffy husky, which is what I just showed you. And I was like, right, I'm buying a dog. I was looking at breeders and stuff. And Anna was like, no, stop it. We can't buy a dog, blah, blah, blah. I was like, I'm buying a fucking dog. I'm getting a dog. That's just it. Anyway, she was like, I've bought you one already. And she was obviously all in tears and stuff because it was like 2 days after we'd put the other one to sleep, and she was in tears, and she was like, I was like, what's going on? And she was like, I don't know how to tell you this. She was like, but I bought you one. I've been planning it for the last month. And she was like, I'm just gutted that Penny, the little one we lost, gutted that Penny's not going to meet her, and I had these big visions for Christmas and stuff. So it's been an emotional couple of weeks, which is why I've been a little bit distant, guys. So we've got some exciting things planned for the family, and I get back on the YouTube content and stuff. So I have lots of stuff for you coming up, and then I'll have new dogs for the videos as well.
Yeah.
All right.
Boy, that's so nice that she was doing that for you.
What a legend, right? What a woman.
Yeah.
What a woman.
That's phenomenal.
Legend.
What a woman. Well, look, guys. Yeah, that's it. I'm gonna love you and leave you. All right. Thank you so much for your time. Appreciate for so many of you sticking with us as well. We've started with 17. We finished with 17. I love that. It's been our busiest webcam yet, which is great. I'm gonna get this.
No, that's not true. There is someone that left. It was Yol. Yol left.
Oh, Yol had to leave. Okay, that's cool.
Yeah,
that's cool.
yeah.
Well, look, this is why we record it at the end of the day. I'm going to get straight onto YouTube now. I'm going to literally finish. I'm going to close this down. I'm going to drag it into YouTube. And then I'm going to send it across to the channel as well. So it'll be there ready and waiting. And enjoy the rest of your weekends, guys. I can smell something burning downstairs. So I'm going to get downstairs quickly now and make sure the house is not on fire. All right?
Take it easy, man. Appreciate it.
Cheers, guys.
Always.
Thanks.
Cheers,
Bye.
Check.
Bye.
Ta-da.
Later, y'all.